What's going on, guys? My name is Richard and welcome back to another weekly watch list video. Overall, we have 12 stocks on the focus list for this upcoming trading week: AMD, DT, AYX, PayPal, QLYS, REYN, CHWY, TTD, REGN, Now, Tesla, and iFi. If you have any questions about the stocks I'm picking for this upcoming trading week or any suggestions of your own, just let me know in the comment section below. And I ask that right now you take the time to leave a like on this video. It really does help me out and my channel. But overall, we'll go through each of these stocks in depth in Marketsmith, which is sponsoring this video, and then we'll head over to TC2000 and talk about the setups I would use for each of them and the levels that I'm watching. But starting with AMD, which has been on this list for the past couple of weeks, we've got strong earnings growth the past couple of quarters, up 200% last quarter, sales up 40%, and after-tax margins up as well. The annual estimates are also strong, up 59% for 2020, and for 2021 up 46%. All the revisions are down. The EPS rating is a 99, the Group RS is an A+, the SMR rating is an A, accumulation distribution is a C+, and the overall composite rating is a 99. So taking a look at the fund ownership, you see a nice increasing trend. All the stocks that I buy, I like to see an increasing trend right here. And you've got 3 strong funds in the IBD mutual fund index owning shares of AMD. Next up on the list, we've got DYNA, which develops software intelligence platforms to modernize business operations. And overall, this recent IPO has very strong growth numbers. Earnings were up 267% last quarter, sales were up 30%, and after-tax margins were up almost 20% as well. And taking a look at the annual estimates, you can see that they're up 26% for 2021, and for 2022 up a further 23%. So very strong estimates there, and you can see the revisions are up as well. The EPS rating is an 82, the Group RS is an A+, the SMR rating is not available, accumulation distribution is a B, and the overall composite rating is a 96. Taking a look at the fund ownership, you can see a nice increasing trend, and for a recent IPO, that's a lot of top funds investing in this stock. So this is definitely one to watch, especially because it's a recent IPO consolidating nicely. Next up on the list, we've got AYX, which is involved with data analytics. And overall, you've got some good growth the past few quarters, but this last quarter, you can see they weren't profitable. And you can see that they don't have earnings, but their sales were still up 43%, although they've got lower margins. Overall, for 2020, you can see the estimates are down 45%. And for 2021, they're supposed to pick that back up 106%. However, it is a negative for me that they're down this year, and the revisions are down as well. The EPS rating is a 27, the Group RS is an A, SMR rating is a B, accumulation distribution is a C+, and the overall composite rating is an 85. And taking a look at the fund ownership, you can see a nice increasing trend, a lot of funds in this stock as well, top funds, and overall you can see that they had a nice run in 2019. Let's go to a weekly chart and check that out. But they were consolidating nicely since that huge run from their IPO. So they need some consolidation, and there could be a buying opportunity next week. So next up on the list, we've got PayPal, which provides digital and mobile payments. So taking a look at their earnings, you can see that the past few quarters have had some pretty decent growth. But for this most recent report, they didn't report any earnings growth at all. Sales were up 12%, and those after-tax margins were up 17%. So not explosive earnings like I like to see, but the chart for me is really what draws my eye to this stock. For 2020, the estimates are up 13%. For 2021, up 23%. The EPS rating is a 97, Group RS is an A-, SMR rating is an A, accumulation distribution is an A-, composite rating is a 97. And taking a look at the fund ownership, you can see nice increasing trend in funds over the past 2 years. And you've got a lot of high quality funds investing into PayPal. And what draws my eye about the chart is this huge breakaway gap on this most recent earnings report. So even though the report wasn't that strong, it's the reaction that what matters. And you can see it's been very tight ever since this breakaway gap. So the entry, as I was talking about in TC2000, is a break above this prior high that's set on that breakaway gap. So that is PayPal. And next up on the list, we've got QLYS, which is another cloud-based security solutions company. And overall, the earnings growth is pretty steady, similar to Team last week. Earnings up 33% last quarter, sales up 14%, and those after-tax margins are very, very strong, up 30.9%. For 2020, the estimates are up 7%. For 2021, up 11%. The EPS rating is a 98. The Group RS is an A. SMR rating is an A. Accumulation distribution is a B+. And the composite rating is a 98. Taking a look at the fund ownership, a nice increasing trend from 380 to 480 in the past 2 years, although you only have one strong fund investing into this company. Taking a brief look at the chart, you can see that they broke out a couple weeks ago and since then have been consolidating above this entry point. So I'll talk about my specific setup that I would use for the stock in TC2000 in just a second. Next up on the list, we'll take a look at REYN's fundamentals. And this is another recent IPO that's been very, very strong during this correction. And you can see you've got huge earnings growth last quarter, up 275%, sales up 10%, and those after-tax margins are up 8.6%. For 2020, the estimates are up 77%. For 2021, up a further 4%. And this is very substantial growth in 1 year. You can also see that the revisions are up from the analysts, and the EPS rating is a 96. The Group RS is a B. The SMR rating is not available. The accumulation distribution is an A-, and the overall composite rating is a 90. Taking a look at the fund ownership, you can see that there's 164 funds invested in the stock, but you don't have any high quality funds investing into this new IPO. Next on the list, we've got CHWY, another repeat from the previous weeks. Another recent IPO that provides pet products through their online store. Taking a look down here, you can see that they are not profitable at this time and they don't have earnings. And you can also see that the sales growth is kind of trending the wrong way. So this is not really the trend that I like to see, but the price action suggests that there are a lot of institutions holding shares and potentially buying more. So that in the end is what pays, price, not exactly what the earnings and fundamentals show. Taking a look at the annual estimates, you can see that they're not supposed to be profitable within the next 2 years. The EPS rating is only a 31. The Group RS is an A+. SMR rating is not available. Accumulation distribution is a B+. And the overall composite rating is an 86. Taking a look at the fund ownership, you can see a nice increasing trend. And you have Fidelity Contra Fund owning shares into CHWY. Moving on, we've got the trade desk or TTD, and taking a look at its earnings and sales growth, you can see strong growth the past quarter, up 84% in terms of earnings. Sales were up 33%, and after-tax margins were very strong as well. For 2020, the estimates are down 28%, which is a negative, but for 2021, they're supposed to increase 42%, and the revisions are up. The EPS rating is a 99, the Group RS is a B, the SMR rating is an A, the accumulation distribution is a B, and the overall composite rating is a 98. Moving over to the fund ownership, you can see a huge increasing trend and a lot of high quality funds investing in TTD. So this is a big tell for me. You can see that the best growth funds are investing into this stock. So next up, we've got REGN, which develops drugs to treat eye disease and other diseases. And taking a look at its earnings and sales, you can see earnings were up 48% last quarter, sales were up 33%, and those after-tax margins are very, very strong, up 42.2%. Taking a look at its annual estimates, you can see for 2020, they're up 9%, for 2021, up 15%. The EPS rating is a 97, the Group RS is an A+, SMR rating is an A, accumulation distribution is a B-, and the overall composite rating is a strong 99. Moving over to the fund ownership, a nice increasing trend as always, and you've got 3 high quality funds investing into this stock. Next up on the list, we've got ServiceNow, which develops cloud-based IT software for workflow automation. And take a look at its earnings and sales, you can see nice steady growth, up 57% last quarter in terms of earnings, and up a further 33% in terms of sales. And taking a look at its annual estimates, you can see they're up 27% for 2020, and for 2021, they're up a further 27%. Their EPS rating is a 97, the Group RS is an A+, the SMR rating is an A, accumulation distribution is a B-, and the composite rating is a 99. And moving over to the fund ownership, a nice increasing trend as always, almost doubling in 2 years, and you've got 5 high quality funds investing into this company. So good numbers and good fund ownership. Next up, we've got Tesla, which manufactures Tesla vehicles, of course, and you can see nice earnings growth the past few quarters, up 143% last quarter. Sales are up 32%, and taking a look at its annual estimates, you can see they're up 999% for 2020 and a further 248% for 2021. Their EPS rating is a 65, the group RS is an A+, the SMR rating is a C, the accumulation distribution is a B-, and the overall composite rating is a strong 97. Taking a look at the fund ownership, you can see an increasing trend, and you've got 4 high-quality funds investing into Tesla. And finally, we've got Infi Corp, or IFI, which develops analog multiplexers, encoders, amplifiers, and other kind of semiconductor technology. And taking a look at its earnings and sales, you can see nice growth, up 88% in terms of earnings last quarter. Sales were up 70%, and those after-tax margins were up 22.6% as well. Taking a look at the annual estimates, you can see for 2020, they're up 65%, which is very strong. And for 2021, they're up a further 31%, with the revisions being upwards. Their EPS rating is an 82, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 98. Taking a look at the fund ownership, you can see a nice increasing trend, and you've got 2 high-quality funds investing into this stock. So now that we've talked about all the fundamentals in Marketsmith, let's head over to TC2000 and talk about their setups and overall chart patterns. So starting with AMD, and we're on a 65-minute chart right here. Let's go to a daily. You can see a long-term cup and handle pattern right here, although this handle is quite deep and quite long. So for me, I want to see a breakthrough of this prior pivot and eventually a challenge of all-time highs. Moving on, we've got DT, which has been consolidating nicely after its quick move up. So I want to see a breakthrough of this pivot, and the high was at 34.28. So you could set a limit order for 10 cents above that and just wait for that to be filled. Moving on, we've got AYX, which once again is in a longer term consolidation. So I want to see a breakthrough of these prior resistance levels at around 133.46 and eventually a challenge of these all-time highs. Moving on, we've got PayPal, which, as I talked about in Marketsmith, had a huge breakaway gap on earnings with 35 million shares traded that day, as opposed to the average, which is about 11 million. So huge volume coming in. That's institutions buying, and it's basically gone sideways ever since. So you would set a limit order for 10 cents above this pivot right here, which is at 147.20. So that's what I'm looking for in PayPal, or potentially a green dot if it gets knocked down a little bit. Next up, we've got QLYS, which is also consolidating after a quick move up, and I want to see a breakthrough of the prior pivot right here at 111.79, or a green dot entry as the red stochastic moves above the blue one while it's oversold. Moving on, we've got REYN, which also is experiencing some resistance right here at 35.50. So I would also wait for it to break through this prior pivot by setting a limit order 10 cents above this prior high, or potentially enter on a green dot. Moving on, we've got CHWY, which also had some potential entry points last week. You can see a green dot on Wednesday and also a Bollinger Band bounce on Tuesday. And for me, it's significant that it was acting well on those 2 down days last week. And overall, this could be a higher low right here. And if it continues to move upwards, you could actually buy it on Monday using a green dot setup. But overall, I do want to see it challenge the previous pivot, which is at 46.79, or this prior high at 47.55. Next up, we've got TTD, which also has moved sharply off its lows, and I want to see either a green dot setup, which is a stochastic cross, or a challenge of this prior pivot at 327.35. Next up, we've got REGN, which is a potential green line breakout set all the way back in 2015. And let's turn on the drawings here. You can see that the green line is at 605.93, and you can see it's consolidating right below it. So this is a nice setup. It's nice and tight right here on this right-hand side, and you want to see a quick move upwards and a close above this green line for that setup to be valid. Next up on the list, we've got ServiceNow, which has fallen back to the pivots right here, and I want to see a continued move upwards, either a green dot or a challenge of this prior high at 388.50. Next up on the list, we've got Tesla, which has been very tight the past couple of weeks, and you can see I've highlighted this pivot right here at 869, which the actual pivot is 869.82, and I want to see either a breakthrough of this line or a potential green dot or blue dot, since the Bollinger Bands are getting quite tight at this time. And if it breaks through this level, I think it could challenge those all-time highs, because this definitely is heavily shorted. and those shorts could be squeezed quite a bit, as we saw what happened in late 2019. And last on the list, we've got iFi, which has moved up strongly from its low from the correction, and since then has been consolidating for the past week or so. And you can see it has been moving down on above average volume right here and right here. But for me, this Friday was actually constructive because it was above average volume, but the range was pretty tight and it finished right near this 50% mark on this bar. So for me, this isn't a negative, but of course I want to see it move up, have a green dot setup, or potentially challenge this prior high at 117.21. So that is the setup that I would use, and that is pretty much my analysis for all the stocks on my focus list. As always, if you have any questions or concerns or ideas of your own, let me know down below in the comment section, and please go ahead and leave a like down below if you haven't yet, and I'll see you guys in future videos.